Good afternoon, everybody. It is currently 3 p.m., 3 or 6 p.m., and we entered the trade, and just want to go over the reasonings as to why I entered the trade, how we prepared for it, and the fruits of such. Uh, this is my semi-old strategy where it's a lot riskier in that you have to risk a small amount of your account, and it is a volume trade in style, which means that it's a type of trading style that over time you'll make money, and it's very difficult to kind of see money in a very short period of time because you lose a lot more frequently in this strategy. But the title is When Your Plan Goes to Plan, because we planned this yesterday, and I'm going to show you how that transition in how you can plan for something and it worked. Last week we planned for something and it didn't work, in the sense that what we planned didn't come to fruition. But this week, what we planned, at least thus far, we planned for this to happen and it's happening. And we're also going to check on our other plan, which is a more longer term outlook on EU, I believe it was, that we kind of analyzed, and see where that's how that's come along and what's happened since the last time we checked. But this was a very quick trade. Now I want to ideally check, or get rather, the time in the yesterday stream of which we found the trade, which would mean I would have to. But we've done 140 already, so this title's wrong. What is that prayer that's in? So as you can see, this title was preparing for the new week, part 2, and I believe it was towards the end anyway. Let me see. This is USD CAD. We're looking for a GBP NZD trade. Oh yeah, so we found this trade. This one actually ended up hitting stop loss, Euro CAD. Don't know if the markers are still on. Yeah, this one hit SL. Came after hit my stop loss, came all the way back down to near my TP, then just went up. So it was like partially wrong. Either which way, this just ended up not working out. Maybe I didn't find this off on stream. I don't know. Maybe I did. I feel like I did though. Okay, here's GBP NZD. For some reason, I can't hear it. Might like my voice. One, two, 1, 2, 1, 2. 1, 2, 1, 2. Wait. This is concerning. Where's the audio? Can know for a fact I talked at the beginning. Okay, so the audio is working. So anyway, GBP NZD. I should have probably prepared this beforehand. Anyway, GBP NZD, you can see here, this was yesterday's stream. We streamed this 21 hours ago. And this is GBP NZD, and you can see it's GBP NZD. So what were we looking at? Well, we set our targets all the way down here, right? And we drew the range from the high to the low, looking for. So remember, we were in a bullish trend. I said that we're looking for a sweep, displacement, retracement, enter. So I'll talk about the sweep in a second. But the idea is that whenever you're looking for sells, you want to see bullishness, because you know that those people are going in the wrong direction. So you want to see signs of them faltering, and that's kind of my entry model, right? When the bullish model or the bullish trend is weakening, or the bearish trend is weakening, and then I can enter into the opposite direction, which is in line with my target. Because when I see price moving in the opposite direction of where it wants to go to, it tends to be taking out liquidity on its way, or preparing or coming close to my entry. So that's why I look for bullish moves in a bearish trend. So we analyzed on the daily time frame that this is going to be our target. Why is this our target? Well, one, equal lows. We have equal lows between here and here. So it's resting liquidity below that, because why? Retail sees the area of support. So they put their stop losses below, meaning that if price is over here, it wants to take that area out. We see price now as liquidity hunting rather than, I don't know what you call support and resistance, retail ideas. So that was one of our ideas. Now, you can't just put it at a random high or random low. Like, it's not just, oh, because it's a low, that's my target. No, because there's highs above it too. But you can see the highs are not really equal in the sense. I really like equal highs. I really do. Because it's retail ideas. When I see a retail idea supporting my trading ideology or my trading ideas, I'm happy, because it means that there's, if I see what retail's seeing and I go against retail, I'm now normally in alignment with smart money. So equal lows here, you can see that the general idea is bearish, and the fact that we've taken out some market structure on the bullish side is a bit not the best kind of idea. So we're focusing more on liquidity pools when we go down to a lower time frame. And you can also see here that you can see that bearishness, that bearish structure. See this high, this low, this high, this low, and you can see this low is lower than this one. This high is lower than this one. This low is lower than this one. This high is lower than this one. So that is kind of the idea behind the sentiment. We have our target that's been set, and then we have the shape in agreement. So the market sentiment and bias is in alignment with the market structure. When you combine those two things, you then get a target. And well, no, you don't get a target, you then get a direction. And then when you have a target that's in, that lines up with your analysis, which is analysis of your bias and market structure, and you have a target, those are the three things you need before you enter into lower time frames to look for your entry model. And with those three things, I'll show them on this pair. One is target, that's checked because we have equal lows, which is liquidity. Remember, our target is based on liquidity. Then you want bias. We have a bias because of the fact that we have this lower lows and lower highs being created. So market structure is on our side, or rather bias, market sentiment is on our side. And the market structure, which I just mentioned, is that lower lows and lower highs being confirmed. And then, of course, on larger time frame as well, that sentiment is also appealed to, right? So that's the combination of all of those things, which is why we're looking for sells. Now we're looking for sells. We then need to transition into our entry model. Just because we're looking for sells doesn't mean that we get into sells, doesn't mean that we're always going to be right, but it means that that's what we're looking for. So it's now up to our entry model to then filter out anything that is against that bias, meaning that we may get an entry model in alignment with a buy, but if my bearish or my bias is bearish, then I'm going to ignore it. And then if I see something which is not fully my entry model, even if price ends up going down, I do not get into it. Why? Because my entry model didn't get triggered. And your entry model, as well as your bias context, etc., they are your everything. If you lose that, you lose yourself, you lose your everything in trading, because you are no better than your trading plan. Your trading plan is a definition of who you are almost. And the more you stray away from that definition, the more you are, in my opinion, becoming closer to a bad trader as opposed to a good one. So we got that sentiment. I told you the three things. We set our targets, which was equal lows on the daily time frame. We then also found market sentiment, which is like the larger time frame kind of bias, which would also be linked into market structure. You get your tape reading. You know, you can look at swing highs if you've maybe retraced into a fair value gap. That's all done on a daily time frame. Then you have your third, which is bias, which is market structure. Again, this is mostly done on the larger time frame, but your sentiment slash bias can also be included in market sentiment. So just to clarify, target, which is liquidity. You then have sentiment, which is underlying tone, tape reading. Then you have market structure, which is just reading the markets specifically to the shape of price and time. So that's the three things you need before you zoom in. We did that yesterday. That was all our preparation, right? Those three things we did yesterday. How did we do that? Well, we set our targets, daily time frame equal lows. We looked at the daily shape. We looked at the underlying tones. We saw some swing highs being created. We saw price rebalance itself. We didn't really see any fair value gaps on daily, but on the 4 hourly we did. Price has fair value gaps here. It's also order flow, a place where price can, institution can get in. So we saw that sentiment ideas as well on the 4 hour time frame, and then we zoomed in. After we got all of those three things on large time, we then zoomed in. We then see this swing high, this swing low, and then we saw price retrace. We saw bullishness. Okay, bullishness is good, but that's only half of the part. We want bullishness, but we need that bullishness to end. That's where our entry model gets in. So we zoom in even more. How do we get into our entry model? We see a sweep, displace, retrace. right? Before the sweep, I'll get into the sweep later. But what do we see here? We see a displacement that's marked by the orange candlestick, and then we see a retracement into it. Unfortunately, we couldn't get in at this time because we weren't looking at the markets, but we got in around here, and we set our stop loss quite tight above price, where this is now intermediate term high. We shouldn't really expect price to rebalance or come up and break this high, because it's a intermediate term high, and intermediate term high is a high that has either two short-term highs beside it that are below it, or it is a rebalancing of a fair value gap. And because it's rebalancing a fair value gap, that's now classified as an ITH, which means that price shouldn't go above it whilst we are bearish, or whilst we have our target, whilst we're yet to hit our target. So that's why I could comfortably set our stop loss above here. Our overall target is here. I would have taken out half of my trades around here. Now the truth is, I didn't see the market do this. I was busy doing something else. So, but if I was live on the markets, I would have taken out half of my trades here. It would have closed, retraced a bit. You could either get in about here, which is some bullish candlesticks to rebalance, or compound rather, and then after that, you then have the continuation idea to take out New York low, London's low, and then head towards this daily target over here. This is a overall 1 to 6 trade. I would have taken out half over here, which is 1 to 3, and now set the break even, let the rest run. So we would have made at least 1.5%, because if I took out half of my trades here, this is a 3% win. If I'm risking 1%, if I had taken out all of my trades, this would have been 3% win. But then if I take out half, that's 1.5% guaranteed. And obviously break even then means that anything happens, worst case would be 1.5% win. And that's me done for the week. And if that's £100,000 account, you've made 1.5k in a week. If you have $1 million account, you made 15k in just a week. Worst case, and that's you risking bare minimum too. So that's why I like to focus on quality over quantity trades, because when you have quality trades and you scale your account, you can still get better, in my opinion, results, because your quality means your win rate increases. It means you're less prone to making certain mistakes because you're very strict with yourself. When you start entering loads and loads of trades, it's very easy, or it's easier, in my opinion, to then fall into the trap of emotions. Why? Because you are consistently in the market. You know, it's like someone being in a relationship every other week or every other month, every other couple of months. They're more emotionally tangled because they're getting involved in things that involves emotions. But if they are not in a relationship, or they're in one relationship, or they're single for a very long time, you're very likely to be in control of your emotions because you practiced it. If you are away from the markets, you are practicing good emotions control, because you're not in the markets where your emotions are attached to. So that was the transition we made from the preparation of yesterday into live today. So this is when your plan goes to plan. A lot of the time, your plan never goes to plan, and it's about pivoting. And I showed you how to pivot, and we'll go into another part 2 of that when the time appears. Excuse me. But so far, so good. I'm going to continue holding this. But again, I just want to go over the entry model into why we triggered our entry. I will go over the sweep in a second, but we had this fair value gap, and this displacement wasn't just a displacement. It also took out, on the smaller time frame, it took out all of these lows right here. Obviously, this is the 1 minute time frame, so it's quite volatile, right? But it was a clean displacement. It wasn't like the displacements I've been seeing where it's just it displaces and it's tarries. We took out multiple swing lows, right? Obviously, that's the 1 minute, so I like to see more than one. But here we also took out this area here. Yes, we also rebalanced into this fair value gap, but then we also came back up, and then we continued down. That's what caused the entry. So we had the sweep, we then displaced, retraced, entry, and then obviously it all lines up. So you can see it's just like a story, right? You start from the daily time frame, etc., etc. Now, the way we found this opportunity was actually the reverse. We didn't start on the daily time frame. We were looking for potential areas for our entry model getting triggered, and then we're zooming out to see if the entry model was in line with the bias of the context of the pair on the daily time frame, etc. So that's how I found, and I do that when I'm not seeing a lot of opportunities and whatnot. So this is our trade. We're currently still in, and I can prove, obviously, on my Telegram here, we saw it happen, and we got in late. But you can see the orange bar, you can see this fair value gap, and this is where the sweep comes into play, right? Let me start on this view first. So you can see here we have displacement upwards. We have this 7.9 and 6.2 level, which is on a fib retracement. This is OTE, which is optimal trade entry, which is the area where we want to get into price. We see that if we zoom out, you can see that there's fair value gaps here, fair value gap here. So there's also a fair value gap here. So price came up into the most uppermost fair value gap on the 4-hour time frame. So that's rule one, right? We came up into that area. We then also had the fact that we took out, this is London, New York's high right here. And we had this Asia session, which Asia session took out New York session. Yes, it displaced, but it quickly came back, which is key, right? But it's the fact that we came up into this area, which I forget which time frame, it was a 15-minute time frame. We saw this as an order block, and price came up into that and took liquidity. So we came up into order flow and we took out liquidity on our way to our optimal trade entry at the uppermost limit. And then now we waited for our entry model to take place. That's what caused us to enter, because we did those two things. So the sweep was this taking of these two sessions highs over here, which was yesterday's. And if you zoom out to the daily time frame, you'll actually see that it would actually be equivalent to the it's fine. So here we have the area where liquidity was taken, which is the daily high. So although I say that it's the London high, New York high, it is also on the daily time frame, and this is the time frame where institutions use the most. So we took out a daily high, and that daily high lines up with the high of the day for yesterday, obviously, and that would be the New York session high, which also was in conjunction with the London high. So these two session highs was the daily high in total, and we took that out with one big move into an order block, on order flow, and then we saw our entry model get triggered. So that's why we got in. It's all like a storyline. Like I said, we start from the daily time frame or the weekly even, and you can start seeing, we set our targets, we had the sentiment, we saw market structure, we zoomed in, we saw some more detail, because on a small time frame we expanded the markets, we saw fair value gaps, we saw the range, we came up to optimal trade entry, we sold in the premium. This is also order flow, because this is a bullish run, the last bullish run before this displacement. In a way, that's an order block. And then we got in and saw our entry model get triggered before we got in. We were looking at this bullish move, waiting for it to exit. And you can get in here, right, early, because you have the context. Without the context, you're gambling. But because I had the storyline, I then was able to enter in at the beginning of the story, because I knew the end from the beginning. And so that's why it's important to have a target, because once you have a target, it makes the middle and the beginning much easier, because you know where you're going. It's like having a sat nav in your car. Imagine just driving, like that doesn't make any sense. But if you have a destination, you know the road and route to take, because you know where you're going. It's similar to that you set your destination first and then you work backwards from it. And the reason why you do that is because if your storyline is good, if your ending is good, then it will line up with the middle and the beginning. If your storyline is bad, then guess what? You don't always have to begin writing that story, because a lot of the times we set our targets, but if price doesn't give me all of these things, I'm not entering the market. If price goes all the way up, it doesn't ever displace downwards, it just goes all the way up, takes out this order block, takes out this high, I'm now thinking maybe we're bullish. But because it lined up with my storyline, lined up with my targets, lined up with my bearish sentiments, etc., I now was not only interested, I was also looking and preparing myself. And we started preparing from yesterday. And it's so much easier when you prepare the day before, because it allows you to no longer be in preparation mode the following day. That's why ideally you want to be preparing on the weekend, because the markets are technically closed to retail traders. And I also mentioned yesterday that I don't like entering trades on Monday, because I see a lot of manipulation on the Sunday, Monday, and that's why I like entering on Tuesday. So today was a very specific day for me for entering this trade, which I did enter off stream. I was going to stream it, but I was like, you know what? Let me just enter quickly and I'll just explain it later, which is what we're doing today. So that was the reasoning as to why we entered this trade. So as you can see, there's a lot of detail, but it's really simple after you break it down. And when I start publishing videos, I'll make it a lot clearer and easier to understand. But when it's live, it's a bit, I do my best not to plan what I'm going to say, so that it can be raw and real. So I think that sometimes helps. But I will be making structured videos in the future once I am satisfied with my results. So we're also looking at EU, which was my other model, which this model is more so longer term trading, slower trading, where everything has to be perfect. But not everything has to be perfect, but it has to be, I wait a lot longer. And this is primarily me waiting for the daily time frame to really give me the clear go sign, right? So here we took out liquidity. So with that liquidity sweep, I was expecting price to have a reaction to the downside. When you take out buy side or sell side, you should expect to move to the opposite direction. So this is buy side liquidity. So price took it out. And why is this buy side liquidity? Because it's a high, a swing high on the daily time frame. It's actually an intermediate time high because this is a fair value gap. This is the high that came up into it, rebalancing the fair value gap, and price came down. So whilst we're bearish, we never took that out, right? That's the component or the characteristic of ITH normally. Not always, but that's the if this was happening live, I would assume that price is not going to close above here as long as we are actually bearish. Also, I remember this for a very long time. I made a lot of money from this move here. This bit got a little bit weird because I was expecting to go up, but it was moving weird, and then the continuation was also expected. Now that we're bullish, right? And I expect us to take some more stuff out. But anyway, I was looking for buys, and from this low to this high, you can see that this is OTE right here, and I want price to come down to it on the daily time frame. Then once it gets here on the daily time frame, you can see it's the order block. Then I want to start looking for price to get into price. So that's very simple stuff. And I'm going to look for another opportunity again on the 5-minute time frame to see if our entry model has been triggered anywhere. And then if it has been triggered, then I can go and work backwards. So I'm going to show you if I see any. So so you can see this high, right? It broke it. If I was looking for sales, I wanted it to displace downwards. It actually used that high as like an area of support. Came up here, failed to create this high over here. But I will probably unmark this. Let's zoom in a little bit more. The reason I was a little bit interested because we took out this swing low here, but it's a bit messy. When you're on the smaller time frames, I like to see clean structure breaks because it kind of has to. Okay, this was another one we was looking at, right? USD CAD. We're looking at sales over here. Now we had two areas, right? This was the first one, which we believed, this one actually looks good, right? But let me zoom out a bit. So you can see from this high to this low, this is the daily time frame. We're definitely bearish. That's clear. We have our targets set down here. We zoom in, we see displacement taken out this swing low. So what happens? Well, sweep, we can see we took out this high over here. And I bet you it's the daily high from yesterday. Yep. It's the daily high from the day before. And remember, this is all Monday stuff. So that's why I don't like trading Mondays, because the moves tends to be a fake out or manipulation. So from Monday, we pushed up into this area here. This area here is what time frame was it on? It's a 4-hour fair value gap here. And it's also within the optimal trade entry. That's number one. Number two, you can see bullishness. You want to see bullishness when you're looking for sales, right? So this is good. We've seen this bullishness. And what do we see here? Bam. Price takes out all of these swing lows. Bam, taken out, taken out, taken out, taken out. This is the major one because there's nothing, there's lows above it, swing lows above it. To either side, short-term lows, sorry, above it, higher than it. So this is the ultimate swing low here. And because of that, I'd actually almost say this is ITH. These are STHs. And this is ITH, meaning that when price takes this out, it's a big deal. So price took it out. And if I was to draw now from the New York high to the New York low, OTE is all the way up here. So remember, sweep, displace, retrace. Now the only issue with this retrace is that there's a lot of areas where price could bounce from that's not OTE. So if I'm to enter this, I would be looking for price to come up to this bullishness over here. So I would like for price to come to 705 and I could sell it off from there. So this is the rough idea here. And again, I'm just going to set an alerts so that I can go about my business. And if there's anything of interest, I can then look at the charts manually. But the sweep we've had was that daily high yesterday, so we swept that, and we also swept obviously the red lines is New York's high from yesterday, which is the high of the day yesterday. We swept that, and we consolidated a little bit, but then we finally displaced downwards, taking out 90H, looking at for that retracement into the area where we want to sell, and then we can zoom into smaller time frames and then look for where we want to enter. The same will be true for a lot of these cat pairs. Let me see if there's any other entries. So the main thing I'm looking for here is a clear like trend to the upside or downside, and then a shift. That's basically what I'm looking for in a smaller time frame. For example, here you can see we're bearish, and then we've had a push upwards. The only thing is not clear because it was so bearish that it didn't really create a swing high up until over here. So until it breaks this high, I'm not really interested, kind of a thing. So yeah, this is the only trade right now. I'm quite happy for it. I'm gonna set to break even. I'm gonna post this in the chat and then also say stop loss got here on the previous one. And that's going to be all for today, ladies and gentlemen. And yeah, tomorrow we'll see what the markets give us as opportunities and we go from there. Let me look at these ones. Okay, that's fine. So yeah, that's all for today, and I'll catch you guys tomorrow. It's been your boy CJIC, and